Thank you guys so much for joining us today, and we're just kind of slowly getting everything organized so that we can do this, but we're really, really excited to offer both of these first-time homebuyer classes for you guys. So thank you for joining us or jumping on or tuning in. So I am Marianne Boxall. I am an associate broker with Coldwell Banker.
My name is Bree Ozier. I'm a VP Mortgage Lending with Guaranteed Rate Affinity.
My name is Christian Diaz with Guaranteed Rate Affinity.
I'm Connor Jorgensen. I'm a realtor with Coldwell Banker.
Fantastic. Okay, so we're going to jump into the lending portion of this first. This is kind of one of the first steps that you want to do when you're beginning to look for a home is to get pre-qualified, learn the types of loan programs, which you're going to kind of learn a little bit of that right now. But that is the best first step, so that way when you are talking to your fabulous realtors, you already know what you qualify for, what type of loan program, and what the steps look like moving forward from there.
Right on. So would you jump into it right now?
Yeah.
All right. So a lot of people always ask, what is the very first steps that we have to take in order to qualify to buy a home? And here they are. So you have to first have an employment. We typically will check 24 months of employment. And it doesn't have to be with the same employer. It can be with various employers in the last 24 months. We also check the income as part of that 24 months history. We'll also check credit, which is something that is needed for the lender to know you're going to pay the debt back.
So we're going to go over a few things today and just kind of go over the process. So we're going to go over what a FICO score is. So that's your credit, and that is the score that we are going to go off of to determine what loan program you're going to fit into. We're also going to go over what those different loan programs are and what they look like. What the pre-approval process is, what it looks like, and how that helps you moving forward. What the actual loan process is, over 5 to 7 steps of the loan process. And then working with a realtor, and then we're going to open up if anybody has any questions at the end. We also have some that people have already sent in.
Right on. Okay, first part, credit. Why is credit so important? Like I mentioned, a lender will always want to find out that you pay your debt back. So all the credit does is just assures the lender that you're going to be able to pay the debt that you're acquiring to buy a home. This is also determined by your credit score, your FICO score. And we have different types of FICOs here in America. There's FICO 8, there's FICO 2, 4, and 5. And each one of them have different ways to determine the FICO score. The one that mortgages uses is FICO 8. And this is why sometimes some lenders defer in the FICOs they have. So you may go to Zions Bank and they may pull your credit score, and you might have one different with I don't know, First American Title, not First American Title, but with Wells Fargo, right? Because they use different credit formats to be able to determine the FICO score. And what determines credits is if you have bad credit because you haven't been paying your debts, your credit score is gonna go lower based on your credit worthiness.
So when he's talking about if you go to like Wells Fargo versus Zion or something like that and having different credit scores, what that means is you're going to see it different if you're looking at like Credit Karma, or if you have a Discover card and it has your credit score on like your online app. So all of them are looking at different FICO models. So all of them are going to be different scores. They're also going to be different based on if you're looking at Experian, TransUnion, or Equifax. So that's something to keep in mind when you're looking at, let's say, Credit Karma. You have a 700 on Credit Karma and you're wondering why your mortgage score is either a little bit higher or a little bit lower. That's why they're looking at different scoring models. So just keep that in mind as you're looking. There's a few, when we're talking about loan options, there's hundreds of different loan options, but there's going to be 4 basic types that they're all going to fall under. So the first one is going to be government loans. That's going to be an FHA loan, a VA loan, or a USDA, which is also known as a rural housing loan. So those all fit under those government, and they're insured by the government agencies. We're also going to have conforming loans. So this is going to be your regular conventional loan. That's what a conforming loan is called, is a conventional loan. You're also going to have jumbo loans and then renovation loans. So a jumbo loan is a loan that is over the county limit for wherever you live. So the county limit here is 1,149,000. I know, I'm looking at you. And 1,149,000. It just changed. Anything over that is going to be considered a jumbo loan. So this helps bridge that gap when somebody's looking at something that's $2-3 million range. Do you have anything to add to that?
That's great. We'll go on down payment, right? Each loan requires a down payment. VA loans don't require any down payment, so a person that has served in the military can buy a home with zero money down, right? Which is great because it allows them to really buy a home affordably. USDA is also another program that allows you to buy a home at 100% financing. It doesn't require any down payment. The next ones that do require a down payment are FHA, which requires a 3.5% down payment, along with conventional loans between 3 all the way up to 20%, depends how much you want to put down. And Utah Housing is one of the programs we'll be talking about that allows those people that don't have a down payment and qualify for an FHA loan, but allows them to still finance the property with 100% financing.
So one of the hot tickets right now and what everybody's talking about is the higher rates. So with these programs, there have also been some additions to the programs that have been created to help alleviate the higher rates, to help alleviate those payments. So one of the things that you're going to hear a lot about is a temporary buy down or a permanent buy down. And these are options to help lower your interest rate to help lower that payment and make it a little bit more affordable for you initially. So there's two ways to do this. One of them is a permanent buy down. And this is when you're buying down your rate permanently for the life of the loan. So you can actually put more into closing costs for discount points, and that will lower your rate. So let's say the rates are 7%. You can pay a certain fee to get it down to 6%, and it would be 6% for the life of the loan or until you refinance. The other option is called a temporary buy down. Pardon me. So these can be for 3, 2, or 1 years, and this is a seller paid option. So what this looks like is you would ask your seller to pay a certain part of your closing costs, and this would give you a reduced payment for the first 1, 2, or 3 years, whatever you elect. This is a really, really great option that we're seeing utilized a lot right now to help alleviate those payments for that set period of time until you can hopefully refinance and get into that lower rate and keep your payment just lower permanently.
And what it does, it just alleviates the higher interest rate just for a short time, right? So they grab whatever the cost or the difference in the interest rate. So if you have a payment, let's just say that it's $2,500, and by lowering the interest rate from 7 to 5, it saves you $500 a month or $700 a month. But they'll multiply that by 12 and put it in an escrow account where they can grab the money, the difference between the interest rate of 7% and 5%. So for the first year, they'll pay that difference every single month. Your interest rate is still 7%, but they bought down temporarily to 5 for the first year. The next year it goes up 1 point, and then it matures at the 7% interest rate for the rest of the life of the loan.
And that's such a popular option right now because the signs are pointing towards us being able to have a really big refinance opportunity here in the next 1 or 2 years with what is going on with the Fed and just how the economy is looking right now. That's kind of what is projected to happen. So this is a fantastic option if you're feeling a little bit nervous about getting in to the market right now because of the higher interest rates and what that does to your payment.
So we did talk a little bit about your credit scores. For VA loans, you want to have a credit score at a minimum of 560. There's a low FICO score, but allows VA people to buy a home. USDA, anything above 620. FHA, 580. We would like it to be higher, but you can go as low as 580. Utah Housing, which we'll talk about in a little bit, between 620 to 660. Conventionals as low as 620. And if you are an I-10 borrower, you need a 650 FICO score. Let's go ahead and talk about Utah Housing, shall we? Or what do you?
Yeah, let's go for Utah Housing, and then we can go over the 5 steps to
Awesome.
transaction.
So what Utah Housing does, it allows you to buy a home when a down payment is required. So for example, if you have an FHA loan that requires a 3.5% down on a $500,000 home, for example, an FHA loan will require you to bring $17,500 to the table. Well, if you don't have that money for a down payment, Utah Housing will come in and give you that money as a second mortgage to be able to buy the house. Not only will they also give you the down payment amount, but they also give you a little extra to pay for closing costs, which is needed to be able to close a loan. This is a phenomenal program because you can have a 620 FICO score all the way up to 660. And it allows you to buy the home at 100% financing. Now, here are some of the numbers. If you are a family of two, for example, here in Wasatch County, the most that you can make, because they do have an income limit of $127,650. So you can definitely qualify even if you make a little bit more than the average. If you're a family of 3+, you can make all the way up to $148,150. And the loan limit can be all the way up to $758,450. So this program is really applicable for those people that don't have a down payment but qualify for an FHA loan.
So we've talked about a little bit about the different loan programs, and there's a lot more to them, which we are happy to go into on a case-by-case basis because it will be different, a little bit different for everybody. But the 5 steps to a perfect transaction is kind of what we want to go over next. And this is really important to do in conjunction with your realtor and whoever is representing you. So the first step is we want you to apply through either of our websites for the digital mortgage. You can do everything online. Sometimes we can get you fully approved in as little as 24 hours. It's fabulous. So what that looks like is we're going to look at your income from your main job, however many jobs you have. If you're self-employed, we're going to want to get your tax returns. We're also going to look at your assets. So what you have available to put down if you are going to be putting money down. And then your credit. So looking at what your credit looks like, what your credit utilization looks like. From there, we're going to look at getting you pre-qualified. So we're going to identify the best loan program for you, what that down payment requirement is, and what your payment would look like. And then we're going to go ahead and get you pre-qualified. And at that point, you're going to want to reach out to your realtor, who you've probably already been working with. We're going to tell them what it looks like if we need to ask for closing costs, anything like that. You're going to find your house and you're going to sign a contract.
This is really cool because this is the first step for realtors. They will love you if you come with a pre-approval letter saying we are ready to buy a house as compared to we don't know what we can afford, right?
Yeah.
So this is the number one step that you must take, and your realtor will love you forever and ever and ever.
We really can't do much without the pre-approval.
Yeah.
Right.
Yeah.
Well, and it helps you guys identify what ranges you're looking in and
Absolutely,
what is possible for that specific client at any time, right?
Do you guys want to talk a little bit about that, maybe?
Yeah, we will absolutely refer you right away. You can call us first because we like to be involved in that process and to be able to know right away. But you can also call them and they can refer you to a great real estate agent. So it kind of depends on what you have in mind first. If you know your lender versus your real estate agent, we work so well together that we can refer you to great lenders like these guys, and they can refer you to great real estate agents like us. But we will that is the very first step. So that's why it's important that they go first, because this is where everything begins, and you buying your home is right here with your lending.
And it is important to have a really good open communication between your lender and your real estate agent. We work so closely in so many of the things, such as deadlines. If there's going to be seller paid closing costs, they need to know that up front so we can get that in the contract right off the bat. It really helps everything flow so much smoother for us, for the sellers, for the clients, everybody.
Well, it's a peace of mind too, right?
Yeah, absolutely.
Yeah.
So after you sign your contract with all that information that you gave us for your income, assets, and credit, we're going to go ahead and put you through underwriting. Underwriting it's a different portion of the lending where they go through everything, and we're going to make sure that everything checks out. Your income really is what you said it was, that there's nothing in the credit that we need to be concerned about. And from there we get an approval that we can go ahead and pass forward to the real estate agent to let them know, hey, they are approved. We're going to be able to close this loan, as we've anticipated, and we just have to do X, Y, and Z to get there. So we need an appraisal, things like that.
Yeah. Well, I think once they have that, they can start the fun, right? I mean,
Yeah.
they can start looking for a house, right? I mean, the stuff we're talking was the boring stuff, right? The stuff that really like.
They get the fun part.
Yeah,
We
you
do
fall
get the fun
asleep
part.
on our end, but I mean, unfortunately, we have to get it from you guys, and if you guys have a good relationship with a lender. And you follow all their guidelines and all what they're asking, you guys are gonna have a successful closing, and you'll be happy. The realtor will be happy. The seller will be happy. I think at the end of the day, we really want to work with you and help you get to that finish line. But yeah, our part is the boring part. That part is the brain damage. But then the fun part starts, right? You guys start looking for a home. You guys want to talk about that real quickly?
It's like a mullet, business in the front, party in the back.
Yes, right.
That's exactly what it
Yes, yes. That's how it is.
You guys get the best part.
Yes. We boring.
Yeah. So yeah,
Cool.
we can jump in.
I'm gonna
Wherever you want to.
slide this
Okay.
over a little bit. Now, if you guys have questions, again, we're gonna answer questions at the end, but we're gonna try and go through some of this. So, first thing we want to talk about is why it's important to use a realtor as opposed to just trying to find a home on your own.
So first and foremost, we are the professionals in the industry, so we know the real estate world in and out. So that is
for a living, right?
we do this for a living. So yes, that is kind of the first thing that we're going to be looking at. So, do you want me to just keep going?
Yeah.
Okay.
Sure.
So we also have access to all of the homes that are listed. So even if you are looking as a for sale by owners, we can see those too. But we also have MLS access, which gives us access to everything that's going to be available. And also sometimes we have things that are called pocket listings. People who are like, make me move. Bring me a buyer. I don't really want to list yet. By people in our office, other professionals that we work with. So we just really have access to all of those things that would probably give you more options when you're searching for a home.
Yeah, the MLS is one of those things that, there's that public side of it, but in order to get into those homes, you actually have to be assisted by a realtor. Having your own buyer's agent will allow you to just call us up, say, hey, we want to go see these homes, and then we can go take a look at them. Instead of, the alternative, which would be, I guess, to call the listing agent or go look yourself. Yeah. There's also, accountability with using a realtor. Is it's our job. We're going to be on time with deadlines. The paperwork can be really extensive if you're using, especially if you're using different types of loans and everything with FHA loans. But that's kind of our responsibility, is just to make sure that everything's in order, to take that stress off of you. Moving is one of the most stressful things you can do in life, and the home buying process should be stress-free and easy, and that's why you're going to hire us.
For sure. Your home, whether you're selling or you're buying, is your biggest purchase you'll ever make in your entire life.
Yeah.
So it's just handling that on your own doesn't make a lot of sense. You want to bring in a professional for something of that magnitude.
Exactly.
There's also a lot of fraud going on, and so this is something that's a little bit newer. I mean, I've been in the industry for over a decade now, and in the past couple of years, I've seen an increase in fraud. Specifically, recently, I had someone reach out to try and list a lot for sale, and they were not even the owners of the property. So having a real estate agent representing you, one, is going to help make sure that you are not going to buy a fraudulent property, because unfortunately, we've had a number of people that just find something on Zillow, it's a little bit underpriced. They're like, I really, really want that lot, so I'm going to go forward and just send over the money and move on with this contract. It's not even real, and they've just sent their earnest money out into the oblivion and it's gone. So you want to make sure you have a real estate agent to make sure that everything is on the up and up. They're partnering with the correct title people to make sure that things are they're actually real.
Yeah, someone you can call to say, hey, is this email real?
Yeah.
Should I wire my down payment to this
To this
offshore
office.
account? Right? No. Using a realtor is going to save you time. It's going to save you money. We're going to be able to negotiate on your behalf in order to get you the best price. We represent you. We don't represent this person selling the house in a lot of cases. So time, money saved. And then we're going to hook you up with the best loan guys and gals
Thank you.
in the industry that we trust in order to get you a solid pre-qualification. So there's no surprises, when we get to near closing about your qualifications. So lots of good reasons to use.
And there's a lot of different people that become involved in a transaction that we have
Absolutely.
worked with before. So we can tell you, or we can make those calls for you and make sure that everything gets done, including not just lenders, but the title companies, because that's a big part of it.
Home
Inspectors,
yeah.
additional like radon people. There's a lot of people that we have those connections and
Contractors.
contacts for you, so that we've
Absolutely.
worked with before. So they'll answer our call. They'll show up.
I think as a consumer, right? Because I'm not a realtor, I'm a loan officer. I would feel so scared to go on my own, right? I wouldn't know what to do and where to start, how to finish it, and I think you guys bring that peace of mind also,
Yeah.
right? That calmness and let somebody else go through the brain damage. You know? So-
That's exactly right.
You know what
What
I'm saying?
and it is. It's
The brain
finding.
damage.
It's finding a professional because you guys do this every single day.
Yep.
Yeah.
So this is your profession. This is what you are focused on. I'm a loan officer, so I am in the real estate world, but still, I don't know the ins and outs like you guys do. And there's so much to it. I mean, you look at a contract and there's so much to it. So having a professional that can navigate that for you is so important.
Absolutely. Okay, so if you come to us and you've just started the process, that's perfect. You know, and you haven't talked to a loan officer yet, we're gonna hook you up with these guys to get you pre-qualified, so we can start looking at homes. Okay. So once we have that magic golden Willy Wonka gold ticket, in order to start the home buying search, let's talk about that. What's that process like?
So now we can start looking. This is where the fun begins. But we have a budget. So instead of you going on and saying, hey, I want to look at this $1 million house, maybe we're going to scale that down a little bit. Or maybe we can go more than you thought that you could go. So we're going to find the houses in your budget that we're going to be looking at so that you can actually have an opportunity to purchase those. So that's where it begins. So we start looking at the homes. We find homes that you're interested in and we get to go out and start touring.
One of my favorite things to do with first-time home buyers is we'll have our criteria, our budget included in that, and then I set up auto hot sheets. I don't know if you do this too.
Yep.
Set up auto listing alerts so that you are notified. This is again through the MLS that we have access to. You're notified every time a property that fits your criteria gets put on the market. So you have the first eyes on it. I set my people up so it notifies them as soon as it comes on. Sometimes they'll get 4 or 5 emails a day. Sorry, but we can change that. But you're getting the first eyes on the property, and you know, sometimes in a strong buyer's market, it's key to, or a strong seller's market, it's key to have the first eyes on it.
Yep. So those lists are a good place for it, just for you to start looking. We'll also be seeing those every day. I know those always will come to me, those lists, and so we're able to see. And if something big comes up, we can call you right away and say, hey, we think this checks most of your boxes. Now, this process can be something very, very quick. You're looking for homes, and sometimes it's the first home that a client walks, and that's the home for them.
I've had that happen before.
Sometimes it's more than 70 homes.
I've had that happen before
So
too.
it just kind of depends. So how long that process is from getting your pre-qualification to when you go under contract on a house depends on finding your right house.
Yeah, usually. So yeah, that's typically the process. And then once we do find that home and you decide to write an offer, we can talk a little bit about how that works. Okay, so we're gonna visit the home, check it out, and then I'm gonna go home and Marianne and I, we're gonna do our homework on it. We're gonna pull a list of comparables, make sure that the price that they're asking is justified. We can talk about terms of the contract and everything, and what inclusions and exclusions we want to have. But really, we're gonna just go through the whole contract together and nitpick everything we want, including deadlines, inclusions, exclusions, price, deadlines, all those things.
Yep. And remember that when we're doing this, we do work for you. So as we bring you a CMA, that's coming from our knowledge, our experience, and our tools that we have to be able to give you the best information as you're going into that process. But ultimately, you are the one buying the home. And so those decisions come to you. So however much you want to offer, we will offer what you want to offer on a home. We just give you the guidelines and the information as far as price goes, as to where it might be a good idea, but ultimately you make those choices. And the contract is it's quite long and it's quite extensive. There's a lot of legal terms in there, and those are things that we see every single day. So we're dealing with all of those terms. I've had people call me, other agents, new agents, and I can be like, well, this paragraph says this. They'll be like, oh yeah, and yet I'm out on a walk. Like it's just, like I've seen so many contracts
like
that we
the back
know
of our
it.
hand,
Yeah,
huh?
so those are things that we're going to help you, because there's a few things in there that I've had clients even say, hey, can we instead do this with our earnest money, or can that paragraph say this? And it's like, well, this is why I don't want to do that, and it's because I'm protecting your money. So there's things in there that like read a little differently if you don't know and you're not in it every single day. So that's where the contract starts. So once you find a house, we help you write that contract and we present that to the agent or the person, the for sale by owner, who is listing the home. So we present that offer and then they take it to their clients and then we kind of wait for a minute.
Yeah, we wait. We usually give them an acceptance deadline. They can accept our offer within that time frame, or if they decide to counter, they'll write a counter offer. But from the time the seller accepts our offer to the time you get the keys to your house, how long is that? Typically 30 days.
30 days. If we do have options where they can get completely through underwriting before they even go and start looking at houses.
That speeds up the process.
Yeah, it speeds it up a lot. In that case, it can be as little as 2 weeks, which is fabulous.
We both close loans within 10 days or less.
That's
Yeah.
crazy.
Yeah.
So it just depends on, again, if that's one of your goals is, you're coming up on the end of your lease or something,
Right.
and you need to get into a home quickly, we're going to put you with loan officers that are able to help you do that.
And it's a partnership between not just us, but you as clients as well. We can't get things through as quickly on either side if it's taken a little bit to get needed documentation over and things like that. So it really is a partnership. We can work as fast as clients allow us to.
Yeah.
So that's important to keep in mind.
Yeah. And the cool thing is that we have a system that allows you as a client to upload all your documents online. You don't have to bring them to us. You don't have to email it to us. You can do it in a secure system. Put all your stuff in there, items such as W-2s, your paycheck stubs, easily into this system, and we can just wait to find a house and get you guys financed.
Yeah.
It's really a quick process as far as writing the contract goes, and everything is done digitally, typically on our end. If the client wants me to sit down and go over and sign on paper, we can do that as well. But most things are in programs that are electronically signed, so it's pretty quick, and
it's quick.
we can just send it to you and just wait. Then it begins the waiting game, back and forth.
Yeah, the
So,
negotiation period, right?
yes.
Okay, so what you mentioned earnest money earlier. Earnest money, let's talk about a little bit what earnest money is. Now, when we write an offer and present it to, this is how I like to explain it. This is kind of a cheesy way. But when we present it to the seller, we've got to make it look legit. We've got to put a little bit of skin in the game. And the way we do that is with earnest money, okay? Typically, how much do you see? 1%? Is that, depends on the price range.
Depends on the price range, so I'm not sure that it's really like a percentage base.
Yeah.
Definitely,
We want to have enough earnest money to make our offer look, what's a better way of saying legit?
It makes you
right?
look serious.
Concrete.
It makes you
Yeah,
look
thank
serious.
you.
Yeah,
Concrete.
yeah.
Concrete, yeah. It's to solidify our offer. And depending on the deadlines and certain criteria, that will determine where that earnest money goes. If everything goes right and we close on the home, that earnest money just becomes a portion of your down payment. So when you wire your money at closing for your down payment, you'll have the only money you'll wire is whatever's remaining after that earnest money.
And so just on that, that's why I don't love saying like any loan is like 0% down, because your earnest money always goes towards the contract. And I guess you could put 0, but I don't know that anyone's ever going to take it. So you will have to have a portion of funds to go over with your contract.
Yeah.
So it's not, so
for
you
earnest
can't
money.
just have $0 in your bank account. Obviously, you're not going to get approved for a loan there either, but you do have to be able to put a little skin in the game to show them that you're serious.
Exactly.
But if you have a really good real estate agent, and this is where this comes in, that money will go towards the purchase of the home. You will not lose it.
Yeah.
Yeah.
That
So-
if we lose your earnest money, we've done something terribly
Yes.
wrong.
Or-
something's bad.
Or we have conversed and made a decision that
Yeah.
you're willing to take a risk.
Yeah,
So,
yeah. So let's
yeah.
talk about what would cause that earnest money to go to the seller, or to go towards your down payment, or back to the buyer.
yeah, so we have a lot of deadlines that protect you. And those are things that we as real estate agents make sure that you are aware of and that they're coming up. So there's 3 main deadlines in a contract. There's the seller disclosure deadline. Well, there's 4 deadlines, I guess. Seller disclosure, there's the due diligence deadline, there's the financing and appraisal deadline, but those are your earnest money deadlines. And then there's the settlement deadline.
That's what
So-
you're saying.
Yeah, that's what he's saying. So the first one is seller disclosures. So as a buyer, you're going to purchase a home from someone. That someone has a history with the house. They've lived there for a while. Maybe they haven't. Maybe it's been a family member. Maybe they just bought it. But they're going to disclose to you anything they know about the house that is material that you may not be able to find out in an inspection.
Some things I've seen are, there's a past leak in the roof that was fixed, but that's something we want to be aware of to make sure that was remedied correctly. Other things they'll put issues with, the major appliances with the AC unit, furnace. It's a 13-page document. Actually, it's 17 pages that goes through absolutely everything about the history of the property and its current status, basically, with everything functioning. So that deadline is the very first deadline, and we have until that deadline to make sure everything checks out, to be aware of things to check in our due diligence period, and sign all those seller disclosures and return it back to the seller.
So as a buyer, you will get those seller disclosures, and they may look differently. So the seller can provide different disclosures than just the ones that are being talked about. So as a buyer, be prepared if you get something that's a little bit different. There is also that option there. The next one is due diligence, and this is a big deadline. This is probably one of the biggest deadlines in relation to earnest money. So it can be, typically if you're going on a 30-day contract, it's about a 14-day period, which is about a 2-week. But kind of depends on different factors in the contract that you guys go under contract with the seller on. And the due diligence is your opportunity to bring in a home inspector to get a lot of tests done. So like, radon, meth, anything else like that. So what else do you do during due diligence?
Yeah, basically we just want to inspect, absolutely everything. If the home's in some weird zoning, we want to go to the city and talk about zoning with them and figure out the future plans for development. I've had that happen with land before. With the first-time home buyer, typically, your due diligence are performing inspections, verifying everything from the seller's disclosures, and doing your tests. Those are basically the.
You'll also get the title reports, which are important to look at. If you have any water involved, that's a big thing to be aware of. HOA documents, you'll get all of those. So maybe you get the HOA document and find out you can't have a dog. So those are all the pieces of the due diligence, or you find out on title that there's a specific lien in a weird way or an easement that you weren't aware of.
Yeah.
So those are things that are all part of your due diligence that you're going to research and look. And if you're like, hey, this one's giving me a red flag, I don't feel like this is the property for me, we can cancel the contract, we walk away, you get your earnest money back, and we start again.
Yeah. Now, what happens if we back out for any due diligence reasons after that deadline?
Then your earnest money would go to the seller.
Would go to the seller. Yeah. So will. I put in my calendar, I do a 72-hour notification, a 48-hour notification, just so my buyers know, hey, we're coming up on our due diligence deadline. I'll be texting you, calling you, hey, you guys good with due diligence? Do we have any issues? After this deadline, we're more solid into the contract, and it's gonna be harder to back out.
Yep.
So that's another just a key reason to hire a realtor to keep you on task with all those deadlines.
The next deadline is the financing and appraisal deadline, and I just want to turn it back to these guys for just a second because we talked a little bit about inspections, but this always comes up with people specifically who are not in the real estate world. What's the difference between an inspection and an appraisal?
Ooh, so that's a
really
really good one.
Pardon me.
Yeah, so the inspection it's a home inspection. That's going to be the nitty gritty. So if a, if a window isn't opening properly, if there's a small leak in the toilet, if there's something molding missing or something like that, it's going to be really fine details. Whereas an appraisal, which is what us as your loan officer, we're going to order for you, an appraisal is going to be making sure that there aren't any major structural deficiencies, that this house is going to last for the term of the loan, which is typically going to be 30 years. So it's making sure that there isn't, major roof issues to where the roof would need to be replaced in the next number of years. For some of the more specific programs, government programs such as USDA, FHA, they're going to have some different things that they need as well, such as making sure that there are railings over a certain height on any patios or stairs and things like that. So the home inspection is more going to be for the really small details. Sometimes it's going to be big things too, where there's mold or there's been a massive leak. Yeah. So it's going to be kind of all inclusive, whereas an appraisal is going to be making sure that there are no major structural deficiencies and that the house is actually worth a certain value, and it's going to determine that value too.
Yeah, so an inspection is not required by the lending industry. It is more required by the buyer, right? Because they want to have the peace of mind that the property is in good condition. So, and the buyer will pay for it from their own pocket, and the payment or the cost is different for every home. So, and typically the licensed real estate agents know some people that they can refer you to. We don't need to see the report. We don't want it. It's just more for you and the real estate side of it. The appraisal part of it is more unique for us because the lender wants to make sure that they're lending you money based on the property that has the correct value, right? So if you're buying a $500,000 home and the value comes in at $490,000, obviously the lender is going to go off out of the $490,000, not the $500,000. So it is very crucial for us to know the value because it will determine the debt to income, not debt to income ratio, the loan to value. It also determines whether or not the property meets some guidelines, like Bree was saying here, for FHA or VA, and even some conventional loans. We want to make sure the property is in good condition. So that's the main thing. The appraiser doesn't go into the property or inspect it. It doesn't look into the plumbing or go into detail. But if he sees something visually, a broken window, for example, for a FHA loan or VA loan, he will put it in the report saying, hey, there's a broken window. Or if he sees some shingles missing on the roof, he'll put it in the report, but he will not inspect it. He will not say, I believe that this roof only has 5 years left of life. He'll put it in the report saying, they need to have a professional inspector come in and inspect the roof, right? So that's the difference between the inspection is just a peace of mind for you to make sure the property is in condition, and the appraisal for the lender to make sure that the asset, the collateral, is in good condition and the value with it.
So as a buyer, you will want to order an inspection. And that is, again, another cost that you need to be prepared for when you're purchasing a home. You can choose and elect not to do an inspection. Obviously, as real estate agents, we're never going to encourage that. We think that every buyer should go in with the knowledge of what the home is about. But again, that's something, and that is something that if you find something on an inspection report that you don't like and we decide to walk away from due diligence, you do not get your money back for that inspection report. So that's paying them for their service. So that's another thing to be aware of.
Just costs incurred for purchasing a home.
Yeah.
And one thing, I'm sorry that I
you're
forgot to add, both inspection and appraisal have a fee, separate fees. They're two different fees, and the buyer has to pay for it. So.
Yep.
Yeah. Now with going back to the earnest money, if the appraisal on a $500,000 home comes in at $480,000 or $490,000, and that seller is not willing to come down, what happens?
Then we can cancel the contract and you get your money back.
Yeah, that earnest money goes back to you. Okay, so that's even after the due diligence period. So we want to make sure all the due diligence related items are taken care of before the due diligence period, and then all financing related items. Now, if it's an FHA home, or if you're purchasing with an FHA loan, and the home has FHA repairs and the seller is not willing to or agreeing to fix those, then at that time too we can back out and retain earnest money.
And this is also really important for us as lenders. By this time, we need to have your loan fully approved, and then we need to have the appraisal back. So financing and appraisal deadline is really, really crucial for us as lenders. We have to have your loan completed at that point to make sure that we aren't risking your earnest money.
100%.
Yep.
One more thing I want to add with inspections is that there is an inspection where they go in and they look at the property. You can do just that, where they're looking at the basics of the property, the plumbing, the HVAC, the walls, those kinds of things. But there are a few additional tests that can be recommended to you depending on the area that you live. So, for example, if you're purchasing in Wasatch County, you should do a radon test. And radon is a natural gas that is released underground from the granite, something as it releases. But it actually it adds up and makes it seem like, especially if you have kids in your basement, that they're smoking cigarettes every single day. It's a really big deal here in the state of Utah, and the majority of homes in Wasatch County have radon. And they're higher even more since we've started a lot of the developments, because we are seeing that ground break up. So if you're buying here anywhere in the state of Utah, I recommend a radon test, but specifically in some areas more than others, there's a very high risk of that.
I think out of my last 10 deals, more than half of them have had high radon.
Yep.
with either systems installed already or we had to negotiate a mitigation system. in.
Yeah.
Now that's the important part to know is radon is this big scary gas thing that causes cancer. However, it's easily mitigated by
Easy.
$1,000 system.
Yeah.
But we want to know about that prior to the due diligence deadline so we can get your seller to pay for that.
That's right.
Yeah.
So that's an important test. And it will cost a little bit more. We have some opportunities as
It's
well
worth it.
for free. So there are some
Yeah.
people that will do it. So if that's something of interest. Also, there's some places in Salt Lake Valley, also up here, that they're meth testing. You might want to get some meth testing done.
Mhm.
Yeah.
So
So my first house that I bought more than 20 years ago, right? It was a used home, obviously, somebody was living in it. So the report came back and I was like, oh my goodness. My agent, which was one of my best friends, said, hey, this is not a brand new house. You are gonna find things on this report
Yep.
that is not 100% satisfaction, but it is within living conditions. So maybe it's something that don't be scared. When
don't
you
be
see-
scared.
Yeah,
Right, there's
absolutely,
so many
yeah.
things
You're,
that
you're buying a used home.
Yeah.
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 But so that's a good. That brings up a good point. In the negotiation period where we're negotiating repairs, we want to save a lot of our negotiating power for those big
Big
items,
ones.
Yeah.
right? If it
Yeah.
does need a new or a radon system, we want to hit those big ticket items before we get down into the nitty
Yeah.
stuff.
because even new homes will have little things.
Yeah.
Oh yeah.
Yeah. Yeah.
Paint,
That's true.
whatever.
That's right.
Yeah.
So, okay. And I guess with that, Utah is an as-is state.
Yeah.
Homes are sold as is. So as you go in and make an offer on to purchase a home, it is an as-is purchase. We can negotiate those things. The seller can say no.
Yeah.
So just know that, and then that's where we say, okay, we can't meet in the middle and make it work, or you say, I like the home enough, I'm going to move forward. But again, that's conversations we'll have with you.
All negotiations.
Yep.
Everything's negotiable. All right. So after our financing and appraisal deadline, we get the clear to close, right?
Yep.
Once we get the A-OK, the appraisal's good, our loan's good, our due diligence is good, everything's good, we get the clear to close. And that is the best phone call for us as realtors to receive from these guys. It's like, yes!
It's
deal's-
also our best phone call. It's
Yeah,
our favorite phone call.
that's a fun phone call. So once we get that clear to close, can you guys explain the 3 days prior to
Yeah.
closing?
The
Yeah.
city, this is a big deal specifically with first-time home buyers. So
Yeah.
I'd love to, yeah.
You wanna?
Yeah,
Go
sure.
on.
So when you get a clear to close, there are a couple of things that happen. The lender is going to send something called the closing disclosures, and it's going to allow you to review the numbers to make sure that all the fees are correct, just the same that we presented to you at the beginning. There's not going to be any hidden fees, anything that comes out of nowhere, another $5,000 you're going to be paying. We want to make sure that what we show you in the beginning with the loan estimate is going to be pretty close to the closing disclosure. Now, when that happens and you review it and you sign it and you say, okay, I agree with these numbers, that's when the clock starts. We have to wait 3 business days to be able to close the loan. So it is crucial for us that if you are needing to close your loan on a Thursday, let's just say of that week, if you don't sign those documents by Monday, then you will not be able to close by Thursday because we have to wait 3 business days. So in that case, we have to extend it to Wednesday to Friday, right? And then if we keep waiting and prolonging it, then we're also prolonging the closing. So we may have a loan 100% approved, but we cannot close it until we have that form, the closing disclosure signed.
Yep.
Yeah.
I had a client actually. It was one of the seller were not able to move out of their home, but he was cleared to close for almost a month. So,
Oh my gosh.
Oh my gosh.
yeah. So,
Wow.
yeah.
So there are 2 different dates. So we're talking about closing the home, but there are 2 different things. So a lot of people say closing and they think that's when I sign the papers and then I
you
get
get
the
the
keys
keys.
handed across the table to me.
That's not how it works.
That's not how it works. So
No.
what is settlement?
Other states kind of it works that way, right? So settlement. So once we get the clear to close, we get that 3-day waiting period. We go to the title company. We sign papers. At the closing table, you better have worked out your arms that day because you're going to get
Oh,
a
yeah.
workout with all the signatures you have to do.
Hey, we've cut them down a little bit.
We have with electronic
They're
signatures.
half
oh,
electronic now.
That's
Yeah.
recent too, right?
It is, yeah, it's
I
very
remember.
recent.
And yeah. Anyways,
Oh, can we talk about that real quick? Because
Absolutely,
it makes
yeah.
the closing really fun and less time consuming. You want to talk about
That's
a little
true.
bit about that?
Yeah, sure. So we're actually going to send an electronic portion of all of your closing documents. So what that means is we're going to send it. You send it. You're going to sign it. DocuSign comes back to us. That way, when you actually get to the closing table, you have maybe half the documents that you would typically sign. And I mean, we're talking like closing packages are pretty big. Like they're
Yeah.
pretty large.
They used
so
to be huge. They
used to
like,
be massive.
Yeah,
Yeah.
now they're
So
they're
it
fraction
really
of that.
streamlines it, allows you to look through everything before you get to the closing table. That way, if you have any
Yeah.
questions, you can call us. We can go over it. Same thing with real estate agents, but it really streamlines the whole process for
So
everybody.
much fun.
Yeah.
Your escrow officer, your title person is going to be explaining all the documents that you're signing. And then once we've finished signing, the title company will go distribute all those papers back to the lender and wherever they need to go, and send the disclosures or the CDs off to all the title or all the brokerages, and then we get the
Then they'll record the
Recording,
deed
right?
with the
Yeah.
county.
after it's funded.
So settlement is when you sign. So on
Yeah.
your contract, there's going to be a date for settlement. That is when you sign. That is not when you're actually getting your keys.
Yeah.
And it can take a couple of days. What is it with lending? A couple of days
Yeah,
from settlement
depends.
to
Yeah,
closing. Like
yeah.
you have a
Yeah.
number of days.
Yeah.
Correct.
It depends. We want to fund same day. If you sign earlier in the day, and the sellers are also able to sign earlier in the day, we're gonna want to fund that same day if
Mhm.
possible. But sometimes sellers can't close or they
Yeah.
can't sign until the next
Later.
day.
Mhm.
So we have to have the seller side, we have to have the buyer side, and then both title companies have to get that over to us as lenders, and then we distribute the funds.
We also have a down payment assistance programs, right? That sometimes we have to get the funding for both loans,
Right.
especially if you get in a first
Yeah.
and a second. So that may take another day and a half. So just because you have signed your documents and you become legally binded, but you're not quite there yet because
Yeah.
it has to record.
It has to be recorded
Yeah,
and
we have to get all the funds and everything. So
So ideally, we will record the same day. We will sign paperwork, fund the loan, record the same day. If you sign at 10 in the morning, you might get your keys at like 4 o'clock that afternoon. That is the ideal situation. But I always want to make sure everyone
Right.
knows that
Yeah.
you could sign on Wednesday and not get your keys till Thursday.
yeah.
It happens quite often.
Yeah.
Specifically, if someone signs later, if you're like, I can't sign until
After
work.
work, yeah, I've had
Yeah.
that happen
So
before.
you'll get it the next day. Could possibly be Friday, but usually is the following day. So just I like to really point out that there's a difference between settlement and closing.
and as a lending side, we try our best to go as fast as possible so the client can get their keys, right? Because
Yeah.
now they're anxious to get those keys to get into their home and move into them, right? So we are, as
Absolutely.
lenders, we do our best to get that done, to get you to that finish line and crossing it. So
And you will sign your money. You're gonna wire your
Wire.
funds. If you have any, they're gonna pay, and you're gonna be like, I'm ready to go in my home. I gave money for
Let me
it.
move.
Hey,
Don't get it yet.
Can
So
I-
sorry.
Can I talk about that
Yeah.
really quickly? I want to make sure that the clients, when they're talking to us and they have to send money, whatever the amount is, we want the client to talk directly to the title company. We don't want to be liable for the money you're sending. We want to make sure that you are sending that directly to the company where the money's going to be distributed to.
Yeah.
So we'll give you the phone number and the person to contact. We'll include the realtors also in that same email, so we are all on the same page. Because, like Marianne said here, there's a lot of fraudulent going on right now, and
Yeah.
people find very tricky ways to get your money. And we are here to protect you. This is our main job, to protect you and also to get you that loan. So we want to keep you safe as well.
Always call and confirm your wire.
Never send
Always.
money without
Yeah,
consent.
you can call us,
Yeah.
call them twice,
Yeah.
3 times if you want
Yeah,
to. So
please do.
Yeah.
And so once you get your money wired, the title company receives everyone's wire, distributes funds where they need to go, send everything off to the county recorder's office for that for it to be recorded. That's when you become a homeowner.
Yes.
Yeah.
And then we get to meet
Officially.
you and do the keys.
Do the keys, and I don't know,
Yeah.
do you pop bottles? I don't know.
Yeah. Yes.
Yeah, that's right.
So yeah.
So that's when you finally become a homeowner and you can move in.
Yeah.
Now I've had people ask me, well, can we start moving stuff in after we sign? That is
Gotta
the
wait.
worst idea in the
No.
whole world.
Yeah. You gotta
You don't-
record.
No, we
You gotta have
it does,
keys.
yeah, it does not
You gotta-
become yours until you're recorded.
Yep.
And we go meet you for keys.
that's when you become legally binded.
Yeah.
But can I put stuff on the side of the house?
No.
No.
A block away.
Well, anything else
Park
that
the
we
moving
have?
truck down
Yeah,
the
let's
street,
see.
right?
Anything
have-
else that we have for today?
Anybody have
thank you so much for
questions
joining
over
in.
there? Hi, Mickey. Hi, Jessica.
Yeah, do you have any
Anybody have
questions
questions?
online? I'm gonna
Yeah,
check
so
these
I
out.
mean, I had a few come in before, but a lot of them have been answered.
Yeah,
So
yeah.
we had, questions about credit score, down payment, why
Yeah.
we need a realtor.
And here's the greatest part about this.
How
It
long it
doesn't
takes.
stop with this live. You can
Yes.
go to any of our websites, give us a call,
Okay,
send us
I've
an
got
email, send us a text.
I've got some questions on
let's
here.
Yes.
see.
Okay, is there a limit to how many units the house can have when applying for an FHA loan?
Oh, that's
Love
a
that
good
question.
one. That is a good one. Who's that?
Wow,
That's
I got
a
some
good one.
prepared
Yeah.
people.
All right. Yep.
Four units. Anything above 4 units becomes commercial.
And you do need to be living in one of those
Yes,
units, correct?
yes.
Yeah.
Yep.
you have to have occupancy.
There you
Well,
go.
I mean, you can buy it as an investment if you want to become an investor, but you're going to be putting a lot of money down as a down payment. But if you live in it, it becomes your primary residence, and you can put the minimal down payment.
And you
So
can
up
use
to
an
4
FHA
units.
loan, right?
Yes,
with that?
exactly.
Okay.
That's what most people.
And I can't see my screens to see.
Yeah. Yes.
I know, I'm looking, I'm making
Between yours
sure.
and mine, yeah,
What's
we've got
the
screens
question?
all over.
For the Utah down payment loan that you mentioned, does it have an interest rate? What is it? I
Ooh,
think
that's
that's
a good
the
one.
the
So this
Utah
is
housing.
Utah housing, yes.
Utah housing, that down payment assistant portion
It's 8% for the
Right
second
now.
mortgage. Yes.
right
Yes.
now. And
But
it will
typically-
change.
yeah.
So Utah housing, you as a consumer can actually go on. We do not have any ability to negotiate Utah housing rates. They're going to be posted every day. And you can check them just like we can.
That's a government program,
That is
right?
that's a
It's a
Utah,
Utah program.
it's
Sorry,
a
that's
Utah
local
program that works
yeah.
in conjunction
With a government loan.
with a government loan. So
Okay.
those rates are posted and you do not get locked in until you are fully approved. So we can't lock you until the end of the loan on Utah housing. But it's very transparent. You as a consumer can see it just like we can.
So those slightly above the current rates, right? So if the interest rate's like, what is it today? Like 7.
Today, I think it's like a 6.25.
Okay,
with
so
Utah
that is
housing.
slightly
yeah,
high. That is
that's
quite a bit
That's
higher.
what
And the
first time
second's
home-
2% higher. Correct?
It's actually it's a fixed rate.
It's a
right
fixed rate
Yep,
now?
It's
Okay.
a fixed rate,
Yeah.
and that can be in the future refinanced into one mortgage, right?
Yeah.
And that's most people do that. They will refinance after a year and get the equity in the property and combine both loans into one, which is a big beneficial.
So I see another question. It says, how long does a pre-approval remain valid? Which is a really, really good
Oh,
question.
great.
So there's,
Depends.
yeah, it depends. Okay.
It's a good
So
question.
technically it's going to remain valid as long as your credit report is valid. However, if you go out and buy a Porsche in that meantime, during this pre-approval, it's going to completely change it. So the key to a pre-approval is that when you're pre-approved, you don't go and buy anything else on credit. If you are, especially, don't do that during the
Look
whole
your
loan
contract, don't
process.
do that.
Oh
Yeah.
my gosh.
Yeah.
Don't do that during the whole loan process either.
Yeah.
You gotta wait till after we close. So it's going to stay valid as long as your credit report remains valid, which is 90 days.
Yep. That is.
And then as long as you are not changing anything with your income or your credit obligations. I'm talking over here, but we've got
Yeah,
videos
ma-
everywhere.
Pretty much maintain your financial stability the way that you
Right.
submitted the application. Maintain everything the same. I've had a client who closed their loan, right, and they went to RC Willey and bought $20,000 worth of
Oh, gosh.
furniture
Oh my
because they wanted to
gosh.
furnish a beautiful new home, and
Yeah.
they were at the very tip of the debt to income ratio, and that comes up. We're able to see it. Our underwriting
Yeah.
department sees that whenever there's a new inquiry coming into the credit, and unfortunately, they suspended the loan because they couldn't get their home. Good thing they didn't take possession of the items, so they cancel it, and we're able to close it because they didn't go into debt. But I mean, little things like that could really,
Can derail the whole
Yeah,
process.
derail the whole transaction.
Just
So-
wait till after you close and record
And
everything.
record.
Yeah.
You have to have the keys in
Yeah.
hand. So technically it's 90 days as long as you're keeping everything, what your credit and your income, what it looked like when you applied. However, it's really, really easy to re-up that pre-qualification.
Yeah.
We're just getting an updated credit report.
Yeah.
So if you're out looking for a home and it takes longer than 3 months, 90 days, it's really, really
Yeah.
easy to re-up that pre-qualification.
And be honest with us, right? If something happens where you acquire a new debt, obviously we don't know that right away, but we will find out. The underwriter will look into it, and so be honest up front with us. Say, hey, we got a new car, our old car broke down, and we had to get a new vehicle, and that way we're not at the very end past the financial appraisal deadline, and then we cannot do anything because your loan got denied
Right.
because the debt to income ratio is too high.
And real quick, I know we're running short on time, but real quick, our company has a really unique ability to do a soft credit pull. So when you are looking for a home, if you don't have a property yet and you're putting in an application online, it's automatically going to go do a soft credit pull rather than a hard credit pull, which is fabulous because that isn't, you're not getting an inquiry on your credit report. It allows us to do everything we need to do to re-qualify you. You're not going to be getting a million calls from RC Willie, from anybody that has what's called a credit trigger on your credit. But it's a really, really great way for you to see what you qualify for without having that hard inquiry on your credit.
They have another question. What is the best way for you to determine the max loan amount possible? Is there a loan sweet spot that I should shoot for? If the max was $700,000, should I shoot for 80% of that max?
How do you determine the max loanable value for somebody?
So as far as what they would qualify for,
I think that's what the question.
okay. So as far as what they would qualify for, we're going to go over your debt to income. It's mainly your debt to income, and
Yeah.
we'll give you the max. You know that what we often find is that the maximum amount of what you qualify for is not what you actually feel comfortable with.
Yeah.
Can I jump in really fast?
yeah,
Because I think
please
actually
do.
maybe something that he might be referring to. If you are under 80% of loan to value, I mean, if you're over, so you get the just 3.5% down.
Yeah.
Do you want to talk about the mortgage insurance that increases
Yeah,
the
yeah.
payment?
Oh yeah.
So that
Yeah.
80% is really the sweet spot.
Oh, okay, I see what you mean. Yes.
But
okay.
I'm not sure that's what he's asking, but it
So-
sounds like it.
Yeah, so if you are putting anything less than 20% down, or if you have a government loan, you are going to have a form of mortgage insurance, which is like car insurance essentially for the lender. So in the
It
event
protects the lender.
it protects the lender. So
Yeah.
you're putting less money down. So in the event that you default, we need to be able to ensure that we can recoup as much of those costs as possible. So that's where mortgage insurance comes into play. And it's going to be different with conventional and then the government loans. So conventional, it's based off of your debt to income, your credit score, what type of home you're living in. There's about 20 different things that it's based off of. Whereas the government loans, it's a set amount. So that's something that we'll go over with you depending on
Individual.
what, yeah.
Yeah, I think the important part to this is the best way to determine what you can qualify for isn't to try and calculate yourself. Just call these guys,
Yeah.
and they'll be
Yeah.
able to tell you.
Yeah.
We'll do it
Yeah.
all for you.
The main thing that we look at when you're qualifying to buy a home is that we see first the payment on the house, and then we add on the rest of the debts that you have, such as credit card, vehicle debt, and any additional debts. So we look first of all, you can qualify to buy the house, the monthly payment, and then your additional debt on top of that.
And they have to probably make, and you want to keep the debt to income ratio under 50%, right?
Exactly. Yeah.
Depending on loan program.
Depending on the
Yeah.
program,
Yeah.
again, everything depends on
Yeah,
the
USDA
level
is
of
going to be a lot less. So
Yeah.
some of them are more conservative, and FHA is actually going to be more liberal. So they're going to allow up to 55 sometimes.
Like
Okay.
VA loans, they're very forgiving.
Absolutely, VA
so
loans
they're-
are fabulous.
The government has given the vets a huge benefit. So if you're a vet, apply. Because
definitely take
Yeah.
advantage
Yeah.
of that.
And we don't charge any
lender fees.
lender fees for
Yep.
VA.
Yep.
Guaranteed rate of entity does not.
Cool.
Yeah.
You have time for another question? Yeah,
I mean, I think you can.
Okay,
yeah.
what is the
Yeah.
process for pulling equity out of an existing property and using it as the principal of a second home? Probably the down payment.
Mhm.
When using the equity of a home, do you have to show what you are using for the equity? What you are using the equity for, or is it possible to put that equity in the stock market or
other investments. How do you borrow against that equity, and what can you use it for?
That's a really good question. So when you pull money out of your own home, because your home is your assets, right? It's your home. You can use the money for whatever you want to. If you want to put it in the stock market, if you got $100,000, you have to have enough equity, right? Because a lender will not give you more than 80% of the value of the property. So let's just say that you owe that the property is $400,000 and 80% is what, 300,000, right? 80%, yep. 300,000, and you owe 200,000 on the home, so you have $100,000 in equity. So the lender will give you $100,000 in equity, and that money is for you. You can use it for whatever you want. You can go to Vegas and put it all in black if you want to. You
Oh
know,
my
but-
goodness. Don't do
but,
that.
you know, I know you don't do that, but I'm saying
Not suggested.
the lender doesn't care what you do with it as long as you can pay it back. That's all.
Yeah.
Okay.
Okay.
Thank you so much for joining us today. And we have Spanish coming later
Yeah.
this afternoon.
Yes.
Spanish in about half hour.
Yep.
Yeah.
Yep.
So,
Tune in live.
Yep.
Thank you guys.
Thanks.
Yes.
Okay.
And if you have other questions that you've sent, we will get back to you. We just some
Yeah.
of these are
Yeah.
so far away we can't see.
If there's other questions,